Hey there, welcome to the channel. So today I want to go over the market, see what happened this week. A lot of stuff, a little bit of a sell-off today. So the first part is there's all this speculation. So notice that we have the cat cam over here. We'll see what our cat Clyde is doing over there. So what's going on? Now we're getting all this more crap about, oh, Russia's going to invade Ukraine. They're going to invade Ukraine. It could happen at any time, and all these warnings to like US citizens to get out of Ukraine. And look, it's just ludicrous. This is just unbelievable. The simple truth is that, look, the economy is like, we have very high inflation, and part of it is because of all the money that we spent due to the cerveza sickness and all this crap. And it's just at some point the Fed has kept rates low for so long, and they could never get the inflation they wanted. When they get it, they get too much, and now it's like actually hurting, and it's politically hurting Biden. So of course he's like, he needs something else. I mean, it's literally that dumb. The situation on the ground. So here, look at the map. The situation on the ground in Ukraine has not changed. I mean, it has not changed in a long time. Since the Maidan coup, it has not changed. That coup happened. The elected president of Ukraine, whatever, he had to leave. All this stuff happened, and who knows, we supported him or whatever. But the point is, after that point, you had these breakaway regions, right? Crimea, Russia did annex that, and you have these breakaway regions that want to like associate with Russia. So here's the deal. This hasn't changed. These breakaway regions have been there since that coup, pretty much. So they've been there like 4 or 5 years at least. And none of that's changed. The borders, nothing's changed there, right? And so now it's like, oh no, they're going to invade. They're going to invade. So why is all this crap happening now? Why do they think it's going to happen now? Well, it's simple, because Biden needs something to distract. I mean, it's literally that dumb. It's literally that dumb. It's like has a very low approval rating to the point where it's dropped below where Trump's approval rating was, which is like pretty bad. And so what the hell's happening? Of course, he's like, he needs something to distract. Now, the only thing I can hope is that he doesn't actually go to a hot war here. But so let's see. So look, they're not going to take over Ukraine. Why the hell would Russia want Ukraine? It makes no sense. Now, here's what they could want. First of all, the big picture, they don't want Ukraine part of NATO, right? So of course, that's the main thing they're pushing for. And of course, we've been resisting. Oh no, we don't want to, how dare you like suggest that we can't make Ukraine part of NATO? It makes no sense. But, that's the main thing that they don't want, which is certainly understandable. When you look at the USSR and you look at how many other little shit countries in this place that are part of NATO now, like, it's like not irrational to think that that's a potential problem. But look, if something does happen, because obviously none of us know, this would be the most likely scenario. What would happen is what happened in Crimea. They would annex it. And so all these troops, all the stuff that's going to happen, it's going to come into here, and they're going to take these breakaway separatist areas. They're going to take Luhansk and Donetsk. They're going to take that line, and they're going to annex those parts. That's the extent of it. And what's interesting here, if they take this area as this is drawn, they're not going to be able to take all the way a land bridge. They're not going to get a land bridge all the way to Crimea. But, that's the extent of it. That's the most that they would do. So sure, is there uncertainty, blah, blah, blah. Could they do it? Yeah, sure. It's all possible. But it's more likely that Biden is just like, I need something to distract. I think one president, was it, GW, he got us involved in all these wars, but there was actually, it was his father at the very end. I think it wasn't at Mogadishu. Wasn't it like at near the very end of his term, he was, he had lost his approval. And I think that's when we went into Mogadishu, right? And we went into there to try to get the warlords, and then you have Black Hawk Down. That whole thing happened, and it was all why did that happen? Why the heck are we going into some little hellhole place that has no strategic like importance to us at all? Well, why? Because his approval rating was low, and he needed to get his approval up. So he goes and creates a distraction. He needs a distraction. So hopefully this is just nonsense and it's whatever. But you got to understand how dangerous it is, because you keep pressing and pressing and pressing, and at some point something's going to go off. Okay, so let's look at the market. So look at the composite today. Yeah, we kind of got hit here, you know. We got a little bit of beating going on today, down 2.78% on the NASDAQ composite, the SPY. What did this guy do? Probably not down as much. You know, this guy down 2%. So, okay, so here's the setup now. So now, like, you know, as you know, I was talking about how, like, hey, it really looks like we're transitioning to a bear market. And for sure, that's kind of the behavior that we're starting to see. Because we had this sell-off, right? You got this big sell-off here. Okay, so we got this big sell-off. And we did find a base. And look at this little thing. We could not get back above the 50-day moving average. And they tried so hard. You know, like when you look at this stuff, you don't want to, you know, there's no manipulation or anything like that, is there? But look at, they tried so hard here. They gapped it up and they held it, but they couldn't, it came down the next day, gapped it up again. They gap it, and they can't hold it. You know, when they go on there and they gap it, it's like, and then it doesn't hold. It's like, look, you mispriced it. Now, was that a deliberate thing or not? Who knows? I don't know. But whatever, you couldn't regain the 50. And then you have a huge day like this. So yeah, it's pretty bad. And so now let's try to look at this in a weekly. Let's go to the weeklies and see what's going on. Okay. So on the weeklies, you know, you're not going to see it, but what you see here is, look, it's failing at that 50-day moving average, which is about the 10-week, and you can see that it's struggling. So like here on the weekly, you haven't turned over yet, but you can see some bad action on the dailies. So it's kind of looking in that direction. Now, if we go to the NASDAQ, see NASDAQ failing to get above that 200-day moving average. The red one here is the 50-week, about the 200-day moving average. It's failing to get above. So that's extremely, extremely negative situation. And it's important to understand, and then the smaller cap, the Russell, doing particularly worse. And let's just see what Kathy Wood's RK is doing. Yeah, really nothing here. Didn't do anything and kind of got beat up. So look, the thing that's going on is that was there a lot of bad news this week? We had interest rates going up, right? And we finally get to this point. We finally get to this point where it's like, okay, these rates are going up over 2% on the 10-year, okay? And when you look at that, yeah, so this really, really, really big picture here, you've had this, these rates, and you know, we've really kind of kept, and this really is this area, the last resistance is in this like 2% range. And like looking at the weekly, it got back down below 2%, but it's really looking like it's pushing out. And we've been like pushing up here. This almost looks like an ascending triangle that we've had, that we've broken to the upside on. And look, it makes sense. The Fed's going to raise rates. We have all this speculation going on that, oh, they're going to raise before the meeting. There's a meeting on Valentine's Day on Monday. So there's two things. One is, okay, it's sort of like appears to be an emergency or a not normal meeting. It's a closed meeting. However, Kevin pointed out that, yeah, there's a lot of these, and he's right. You know, you can look on the calendar. There was a whole bunch of these closed meetings every month. There's at least one or two closed meetings. So we can't over exaggerate that. And if, you know, Bullard came out, he was one of the Fed guys that is a voting member. And this guy came out and said, hey, he wants to get the rates to 1%. He thinks we need to do an emergency increase of 50 basis points, whatever. We got to do this fast. I think that that's unlikely to happen. I mean, it could happen. We'll find out Monday if something really happens. But look, Powell is like, he's just going to be steady Eddie about it. I mean, think how fast they are moving. Like they're going from literally in December, they were still buying something like over 100 billion a month of treasuries and mortgage-backed securities. And now they're in March, it's supposed to be over. And we're in February now. So they're down to probably almost to the halfway point. That means an extra 50 billion in treasuries has to come from somewhere else. The market has to take that up and the Fed isn't buying it. So they're moving actually very fast. So for them to come out and be like, hey, we're going to go out there and we have to move 50 basis points. It seems really unlikely. So I think this is I'm kind of with Meet Kevin on this. So yeah, so it's kind of it just looks to be like we are, very well could be moving into that bear market. And one of the ways that you can do it is by the behavior that you see in the market. You have this stuff happening, you have this behavior where rallies really struggle. You can't get back above important like 50-day moving averages. We can't get above those. On the NASDAQ, I think we can't even get above the 200-day. So this is bear market behavior, and it's kind of pointing, yeah. So this one is the 200, the dotted is the 200. So the NASDAQ's even doing worse. So it is bear market behavior. Good news is bad news. Bad news is bad news. That's bear market. Bull market is bad news is good news. Good news is good news. So also like Affirm, what happened to these guys? We had some of these blowouts. You had like Facebook had a blowout, Affirm had a blowout, minus 20%. These guys, I'm going to do a financial analysis on these guys. Once again, these are like one of those payday lender. No, not payday lender. These are one of these guys that offer like kind of short 1 year to maybe a couple year financing. And they do have options that are interest free. But of course, I was looking at it like, look, I mean, most people aren't going to get the interest free version of the payment plans. So basically what they're trying to integrate. So like you go to some website and you go to buy something and you don't have the money, and then Affirm will have a button there and you can click the button and immediately apply for credit to do it. But, their interest rates are 15%. I was seeing 30%. So they have, significant interest rates there. So that's how they make their money. Now, going into recession, they're going to hurt. Now, at some point, they may get a benefit because people won't have money. It's possible that people may start having credit trouble, so they won't be able to put it on the credit cards. And then they might go to a place like Affirm, but Affirm might be in trouble if they start extending credit to people that are having credit issues. Because one of the interesting things is a lot of their offers were like within a year. So I can see there might be a strategy that they have to like, look, we're not extending 5-year credit. We're just going to extend a year credit, and that should lower the risk that they're going to default. Yes, but the other side of the coin is that if people are spending money, look, it's really bad. Like if you're buying something, anything, you really shouldn't be putting it on credit. The only thing is the long-term things, the big things, a car, a house, something that has a longer life, things even like TVs and stuff. No, they don't. I mean, you just shouldn't buy it if you don't have the money. And I get it. I get people don't have the money. And then like, let's say you do have a house and you're fortunate enough to have that. And then you got your refrigerator goes and like, okay, I mean, maybe there's some items like where you can do that, but it's kind of a problem, right? It's a problem if you don't have like, I mean, sure, $1,000 for refrigerator, you can get one for cheaper, first of all. But secondly, if you can't come up with $1,000 and you actually own a house and you're not renting, it's sort of a problem. You're pretty thin. You're pretty thin. So yeah, I think this week kind of just points to that bear, that we really could be moving to a bear market. The other thing I wanted to comment on was Meet Kevin. This guy, he's flip-flopping again. But here's the deal. I have a lot of respect for him because he's flipped and he's like, look, this, he was always like buy the dip, buy the dip, buy the dip. And it's so funny. I was saying to myself, like, dude, this guy has never experienced a bear market. This guy doesn't understand. He has no clue. But see, the thing is, he still has no clue. But it's okay. He realized that something's wrong. He realized what he's doing is not working and he's changing it. So my point about Meet Kevin is, and I think it's really important, he's bringing you value. So you want to get information from as many sources as possible. You want to pay more attention to sources where the people realize that, hey, something's wrong. I've made a mistake, or I need to change because things have changed. The facts on the ground have changed, and that acknowledge that, instead of like, more of like a Jim Cramer kind of guy who's like through, financial crisis after financial crisis, like he was telling people, don't sell your Bear Stearns stock. And then like within days, the thing went to zero. And why was he doing that? Because he's a spokesman and he has to be a spokesman for the market at all costs. And because he just won't change. He's like, there's always a bull market somewhere, is his view. But the reality is, remember, financial crisis and '08, and then the tech. He was even there in the tech thing, I think. I don't know, maybe not the tech thing, but he just never changes his thing, never changes it, never acknowledges it. So my point is, I do have more respect for me, Kevin, now that he's kind of changed his tune. And I think it's a really good example. If you're out there, you're watching him and you're watching these other people, watch that. Look for someone that's like going to admit that they're wrong. And it's not like, look, you don't have to have a confessional and be like, I'm wrong, but they have to realize that, hey, I need to make a change, and that's what he appears to be doing. And so I have a lot of respect for that. I think that's it for this one. I expect, obviously none of us know, but my expectation at this point would be that, look, the Fed meeting on Monday, nothing's going to happen. The Fed will continue to move with their plan. They're going to just, stop their buying. March, they're going to raise. April, raise. Who knows? Maybe they're going to raise, 4 or 5 times. I know there's different models predicting different things. They're going to raise. They're going to follow through. And just doing that without even like a surprise 50 basis point is going to cause so many problems in the markets, because these markets just are going to struggle with that. And I would expect, expect that the rates on the 10-year will continue to rise. I mean, they may come down, they may oscillate. In the short term, if there's more like actual worry over a hot war breaking out, then sure, interest rates are actually going to drop because the price of the bonds are going to go up. There'll be an escape to that, and then the market will go down more. But the other side of the coin, there's a bigger trend here. Now it's interesting, the dollar kind of had some bad weeks here, but this would be a similar situation too. The dollar still has this huge base. It's still going up. And I don't know. I mean, I don't think the base is over at this point. If you look at it, we had this huge W. This played out over 2 years. We're still going up. We still have this rising channel. We had definitely in this period here, you had just, you kind of like 7-8 weeks of kind of mostly down motion. And then this was a really bad bar here that you had 2 weeks ago. This one was kind of a bad one, but then it's found some support here. So if things get heated with Ukraine and stuff, the dollar should probably go up. There'll be a run to the dollar. In addition, at the same time, the rates should go down, because you buy dollars, you don't have anywhere to put them. You're just going to buy some treasuries for the meantime, blah, blah, blah. But that's a short-term thing versus this long-term trend that's been playing out. So that's it for this one. Talk to you later. Bye, Clyde.